The Federal Executive Council has approved over 3.65 trillion naira for critical road infrastructure across Nigeria. This includes 2 trillion naira for sections of the Sokoto-Badagry Superhighway covering new lanes in Kebbi and Sokoto states. Additionally, 1.65 trillion naira has been allocated for parts of the Lagos-Calabar Coastal Highway, including an 80-kilometer stretch across Ogun and Ondo states. Minister of Works David Umahi says the project will boost regional connectivity, ease transport, and support economic growth across major trade corridors. The Manufacturers Association of Nigeria, MAN, is urging industrial players to look beyond traditional bank loans as high interest rates continue to bite. With lending rates soaring, some as high as 37% per annum, the Ogun State chapter warns that many manufacturers are unable to access affordable credit. This, they say, is stifling productivity, job creation, and long-term sustainability. MAN advises businesses to explore funding through cooperatives, private equity, and bond issuance while calling on government to address structural lending issues. The association says stabilizing interest rates is vital to keeping Nigeria's manufacturing sector alive and competitive. Nigeria's job market showed strong signs of recovery in July 2025, recording its highest employment growth in 21 months, according to the latest Purchasing Managers Index data. The private sector saw increased hiring as business output and consumer demand surged across key sectors. Companies, especially in manufacturing and services, responded to new orders with higher staffing levels, showing confidence in the current economic environment. Economists say the trend reflects a stabilizing currency, easing inflation, and improving investor sentiment. While challenges remain, the July figures signal renewed momentum in Nigeria's post-reform recovery story. Nigeria's Eurobond market remained broadly stable as of Thursday, July 31, 2025, with investor sentiment showing cautious optimism. The 7.625% November 2025 bond closed slightly above par, while longer-dated notes like the 6.5% November 2027 and the 8.375% March 2029 bond posted minor gains. Mid- and long-term yields tightened modestly, reflecting continued offshore demand. Analysts attribute the improved outlook to better macroeconomic signals, including rising reserves and stronger fiscal discipline. However, global rate volatility remains a factor to watch. The Debt Management Office continues to monitor trends to support Nigeria's external borrowing strategy. Nigeria's foreign exchange reserves climbed to $40.11 billion as of July 2025, marking the highest level since November 2024 and equivalent to around 9.5 months of import cover. The increase reflects sustained inflows, including oil revenues and rising non-oil receipts, alongside market reforms that have improved foreign exchange stability. Analysts say the rebound highlights stronger macroeconomic fundamentals and renewed investor confidence, key factors as the naira strengthens and inflationary pressures ease. Looking ahead, external reserves are projected to reach $41 billion by the end of the year, supported by planned fundraising and continued portfolio inflows. And that's business news on Global News. In Abuja, I am Thompson Natus.